Buying your first home can be one of the most exciting and stressful experiences of your life, but if you're not prepared, it can cost you way more than you bargained for. My name's Kaden, and today we're going to be breaking down everything you need to know to buy your first home in 2025, from hidden costs to must-know tips so you can save money and avoid regrets. We'll cover exactly how much you need to save, common mistakes first-time buyers make, and how to navigate this year's market like a pro. Let's jump in. Let's start with the numbers, because if you don't know your budget, you're flying blind. So in my market of Maricopa County, Arizona, the current median sales price is 490,000. So what does this mean as a first-time home buyer? More than likely you're going to be using 3 to 5% down payment. So let's use 3% for this scenario. 3% on 490 is going to break down to $14,700, and that's going to be for your down payment. Now, separate from your down payment, you're going to have closing costs as well. These are going to be things such as your title insurance, your lender fees, and other associated items. Now, this is going to vary on each property, but typically it's going to be from 2 to 5%. So for this scenario, we're going to factor 2% in for your additional closing costs, which is going to come out to another $9,800. In addition to your down payment and your closing costs, you're also going to have some inspection and appraisal fees. These are going to vary anywhere from $500 to $1,000 each, and they're going to be more than likely required by your lender. And if for some reason an inspection is not required by your lender, I'm going to highly recommend all of my clients to get an inspection. This is one of those tips that can save you thousands of dollars in the long run. For the purpose of this video, we'll factor the inspection and the appraisal at $1,000 each. So based on all the numbers we just went over, in my market of Maricopa County, you're looking at roughly $26,500 to get into a house in this market. So I really hope your head didn't explode when you heard that number, because now that we've gotten them out of the way, let's talk about how you can actually prepare for these costs. When it comes to financially preparing for your first home, the best time to start saving was yesterday, which of course we can't do. So what does this mean? Now, if you're able to start saving right now and we break this down over a 2-year basis, that's going to cost you roughly $1,100 a month in savings. If you're able to do that, you should have just enough for the down payment, closing costs, and inspections for your first home. And I'm sure you're going, Kaden, there's no way in hell I can afford $1,100 in savings a month. But if we really start looking at what that is, that costs break down to about $37 a day. Now, I know that's not in everybody's budget to find, but I'm sure a lot of us are out there going out, getting food, getting some drinks with friends, and a lot of discretionary spending that we don't really need. And of course, we can break down that budget a little further if we stretch our timelines. So if we're willing to look past that 2-year mark that I mentioned, we definitely can save less than that $1,100. The only way to know what we're spending is to keep track of it. So I highly recommend using a budgeting app like Credit Karma's Spend Tracker or something similar that allows you to see where all your spending's going, because you might discover a lot of leaky faucets, such as subscriptions you no longer use and other items like that, that really add up over the course of a few years when you're saving towards your house. If you're already tracking all of your expenses and you're looking at them and you go, there's no way I can afford to squeeze anything out of it, our only real option here is to increase our income. So whether that's picking up a side hustle, asking for a raise, every extra dollar is going to help you get closer to that goal of that down payment. Another tip here is to now start focusing on your credit score. Having a score above 700 it typically is going to help you get some of the better mortgage deals. Additionally, while you're focusing on your credit score, you're more than likely going to be paying down some high interest debts such as credit cards and other things. By removing these debts, you're actually going to increase your savings rate by not paying that high interest debt. Sure, at first you're not going to be saving as much, but over the lifetime, you're going to be saving way more than you would than making that minimum payment on a credit card or other loan. Now that we have our finances in line, our next step is going to get a pre-approval or a pre-qualification. Your pre-qualification is going to be your golden ticket to basically do anything further than see a home. We're going to need it when we go to write offers. We're going to need it for sometimes to even see a property, depending on the seller. So here's what you'll need to get pre-approved. You're going to be, first of all, talking to a lender who's going to break down a list of documents they require from you. This is typically things like your W-2, your bank statements, credit card statements, and all that stuff. From there, they're going to break down your debt to income ratio, which is going to show you how much of a home you can afford and what payments they want to see from you. They're also going to ask for things like your proof of assets, if you have any stocks, 401k accounts, and stuff like that. All of this is going to combine together into create what they call the pre-qualification. Something I'm always advising my clients is to get their pre-qualification done before they even begin the home search. This is going to avoid you looking for something that you fall in love with that you maybe couldn't have even afforded. It also just gives you a clear definition of the max you can afford, which is super helpful before you even get into the rest of the process. All right, now that we have most of the boring numbers out of the way, here's where it gets a little more fun and a little bit overwhelming. Before you start touring homes, I recommend you make a list of your non-negotiables. Things like the number of rooms, your commute time to work, versus things that would be nice to have but aren't deal breakers, like an upgraded kitchen or the color of flooring that you want. Now, even with interest rates being as high as they are, the market in 2025 has still been very competitive. They might be higher interest rates, but it doesn't mean it's important to find a home that you really love long term. Essentially, don't just jump into something because it exists. We're starting to see a little more inventory right now, which means you have a little more time to make your decision and get the home that's perfect for you. If you end up seeing a home you love, act fast, but don't skip important things like inspections, because right now it's better to lose out on a deal than to end up with one that's going to cost you a lot of money in the down run. Now, once your offer is accepted, we're still going to have a few more steps to go. It's not over yet. You're going to have your inspection and appraisal, which still need to be done. And your inspection is where you're going to be finding a lot of negotiating items. So, say the pool has some issues and the equipment. This is where your agent or me, depending on where you're at, is going to come in and start asking for some money back to you. Now, this can go directly to you at the closing table, or we could say, hey, seller, you need to just fix this pool. But this is where the fun negotiations begin. All right, our inspection and negotiations are done, but it's still up to our appraisal. Let me just give you a quick scenario on how an appraisal might not come back in your favor. Say we went under contract for a property for 500,000 and this is what you're looking to purchase it for. This is the seller's bottom line, right? Boom, 500,000. So the appraisal came in at 450,000. Your lender's more than likely going to look at that and go, hey, we can't finance this property. And lucky for you, we have a contingency in the offer that says, hey, buyer could not perform. He did everything he could to try and get this loan, and it's not happening. So, fortunately for you as a buyer, you're going to get your earnest money back. However, you're going to be starting back zero at the home search process. Another tip here that I usually tell my clients at the beginning of this process in person is the closing process takes some time. On average, it's 30 to 45 days, but having an agent that stays on top of the paperwork and communicates with the other parties is really going to help ease that stress and get you to the closing table and get the keys in your hand. And that's it. Buying your first home might seem pretty overwhelming, but with the right preparation and financial steps, it's absolutely doable. If this video helped you out in any way, please don't forget to hit that like and subscribe button because it really helps the channel. And if you're interested in more things real estate, give me a call, shoot me an email, shoot me a text. I'd be happy to set up a conversation with you and make this a reality for you. Thanks for watching the video. If you have any suggestions or interested in any other topics you'd like to hear me talk about, drop a comment down below and I'd love to make a video about it. See you in the next one.